I'm Charlotte McLeod with investingnews.com, and here today with me is Larry Lepard, sound money advocate and author of The Big Print. Thank you so much for being here. Great to have you.
Yeah, thank you. Nice to be with you again. I know we did this last year, and I always look forward to it.
Yes, we did it last year. We tend to meet up about once a year at this time, so we're going to follow up on some themes from last year. A lot has happened.
Yeah.
At that time, you were talking about the gold price coming to 3,000, 4,000, 5,000 level in this cycle. And we've gone past 3,000 and 4,000. I know we're in a little bit of a pullback right now, but definitely getting close to that 5,000 number. And I thought to begin by asking you, what is the quick move of the gold price telling us about what's going on in the world right now?
Yeah, that's a really great question. And I think it's pretty simply explained by the fact that gold smells the coming monetary debasement. We could drill down a lot on it, but at a larger picture level, the Federal Reserve is trapped. The credit-based system that we have requires continual expansion of the money supply and inflation in order to prevent it from collapsing. They have been trying to reduce the Fed's balance sheet and keep money tight, but they've already had to somewhat pivot on that. More than somewhat, they've started to pivot on that. The tightening cycle that Powell began in 2022 has ended. They've been cutting rates and continue to cut rates. They just did so a week ago. And now they've announced they're going to stop the tightening of the balance sheet and actually go neutral. And they even went so far as to say they would probably have to start adding to it, which is, as we all know, printing money. I wrote a book about that called The Big Print. And so, that set of facts combined with what I think is happening in the world is everybody's becoming aware of this. I mean, I think a year or two ago, Charlotte, you or I, or most of the people at this conference, gold investors, et cetera, we were all aware of this issue. I mean, this was not like, headline news to us. It was just that nobody else was paying attention to it. And that's why we were buying gold and gold stocks, and we believed this was coming. And now we're kind of being proven right? It's arrived. And, you see it probably the best way I, look at seeing is what's in the main media. And, you've now got J.P. Morgan calling this the monetary debasement trade, right? And you've got, Morgan Stanley saying, the new allocation for, investors should be 40% or 60% stocks, 20% bonds, 20% gold. And I'm like, what? That's different. It used to be zero gold. And so, you got guys like Mohamed El-Arian, who's a very high-profile institutional investor, saying this monetary debasement trade is a big thing and likely to run for a while. And so I think it's just awareness on the part of many, many people that they will have to continue to grow and print money, and that will lead to more and more inflation, and that in light of that, inflation, they want to have things that the government can't print. And the three leading forms of that are gold, silver, and then Bitcoin. So government can't print them.
Well, we're here at the New Orleans Investment Conference, as we've been saying, and you haven't presented yet, but you're nice enough to post your slides. So I want to pull out a couple of things from slides that you have. And the first one is related to the Fed. I know you started to talk a little bit about the Fed. And when you're looking forward to 2026, one of the things that it looks like you're seeing for next year is Fed capitulate. So I wondered if you could talk about that. It sounds very concerning, and how you see that playing out exactly.
Sure. So they have a math problem. They have a lot of debt, and they either let the debt collapse and we have a depression, or they continue to print money to keep servicing the debt with new capital to make the interest payments. And in particular, we also see a big changing of the guard coming at the Fed. So Jay Powell, who is the Fed chairman, who wants to be Paul Volcker, is trying to be a tough guy. His term ends in May of next year. And you've had some really unusual things, like you've had the president of the United States calling him a moron, saying interest rates are too high, saying he's too late. You've had enormous pressure put on the Fed to lower rates. And frankly, when interest expense for the federal government is running at $1.2 trillion a year, the budget deficit is $1.8 trillion a year. So the interest is really contributing to the deficit. I mean, the government, the U.S. federal government, really needs lower rates, or else interest is going to continue to consume a big piece of their revenues. And so with the Fed chairman turning over, that's another thing I think is driving the price of gold, is that everyone says, okay, money may be semi-tight right now because interest rates, while they've come down, they're still, moderately high. Boy, we can see what's coming. There's going to be a new Fed chairman. Trump has made it very clear he wants lower rates. All the potential candidates are talking lower rates. His most recent Fed board appointee, this guy Stephen Moran, was talking taking them down another 200 basis points. I think Trump tweeted that interest rates should be 1%. So, okay, fine. But the market listened and said, oh, okay, I get it. If that's where we're going, I know what that means. More inflation, and, therefore we got to protect ourselves, buy gold.
Well, and I wonder, so we talked a little bit about what you were previously expecting for the gold price. Have you adjusted your, okay, let's talk about that.
I'm trying to remember, what was it when we talked last year? It was like 2,500, I think, when we were talking last year. I'm just guessing. That's by memory. And we thought maybe, I said it would go to 3, 4, 5. Yeah. So it's actually gone a little further and faster than I thought it might have happened. It's like we're really in it now. As you know, we touched, I think, 4,400. We're at 4,000 plus or minus right now. Yeah, no, I've kind of revised my projections. I mean, and that's an interesting thing, because a lot of people think, well, okay, it's gone up this much, it's got to come back. Nothing goes to the sky forever. It's going to correct. And I think that's the wrong way of looking at it, because I think what's really happened here is conditions have changed. We're in a phase change where, basically we now have knowledge that this debasement must continue to occur for a long time. And in my opinion, we're still only in the first, second, or third inning of the debasement. And so, I now think gold goes to 5,000 and then 10,000. I mean, ultimately it could go to infinity if the dollar fails. That's a tail case and not likely to happen tomorrow. But I think, 4,000, 5,000, yeah, that's easy. I mean, we're already at 4, and, 6, 7 next year, possible. I mean, it's hard to say. I mean, it depends a little bit upon policy and what they do. And I do want to caution people. I mean, the one thing that could blow up this thesis and make me look wrong, or make all of us look wrong, is if the government were to get really responsible. And yeah, right. And you react the way most people do, which is, that's a joke. That'll never happen. And yet, in investing, never say never, because, at some point, somewhere in the future, the government might get responsible, and this trade won't be such a great trade, or this positioning won't be such a great position. But for now, anyway, I feel very highly confident that, these things are going to perform quite well for the next couple of years until they master, they solve this monetary problem. And I don't see the solution on the horizon yet. So.
Well, yeah, and it's good to talk about what could take the wind out of the sails here. I'm sure, though, if there was going to be more responsibility, as you're talking about, that would be something that would be telegraphed. It wouldn't happen like that.
Well, that's right. That's exactly right. We'd see it. I mean, one thing that could do it, though, actually, is just a change in demographics. There's some good data I just looked at recently. I mean, the reason Social Security and Medicare are the way they are, and they contribute so much to the deficit, is that the boomer population in the United States is large. If they mess with it, everyone's going to get voted out. Boomers are getting older. There are going to be fewer of them. There are more Gen X and millennials and others voting. Eventually, those boomers aren't going to have that much voting power, and they are going to have to reform those things. And so there, there will be some kind of fiscal discipline coming at some point in the future. But, my sense is that could be several years away. And I think right now we're really in the heart of, what I think is going to be a very attractive period for the things that we own.
Well, and I have to check in with you on silver as well. If you've adjusted up your gold price, I imagine.
Yeah, that's a great question. So I love silver. As you know, it's in a structural deficit, has been for a number of years. It's a dual metal. It obviously has a monetary role, and it has a gold role. And the fact that it's finally come along and hit a new all-time high, that's really important. When gold was going up and silver wasn't moving, I was like, okay, we're still not in it yet, because we got to get silver going. I mean, there's no real precious metals bull market without silver just going crazy. And as we all know, silver took out the all-time high of 50, which had been hit twice. And, so my new view on silver is probably, next 6 months, 75 is a very realistic target. I think 100, 150 are realistic. I've seen people talk multiple hundreds of dollars and even $1,000 for silver. I don't know. I mean, that's a long way out. But I think, inflation adjusted, the old inflation adjusted high for silver was like, $150, $200 an ounce. So, I think getting to 100 is going to be easy. And the thing that's interesting there is I manage a fund that invests in gold and silver stocks. And, these silver miners, a lot of them have costs to mine an ounce of something between $20 and $30. And, if the price of silver goes to $120, that's a heck of a profit margin. And so these stocks are going to be very, very attractive things to hold. And that's why I hold them. So.
Yeah, and we'll go over and talk about the stocks. But before we do, I want to talk about another one of your slides that I found quite interesting. and it's as we're talking about the prices of the commodities. So it's looking at the gold price and the Bitcoin price from 2018 to now, I think, and you overlay them, and of course it's different timescales, but or not timescales, but
Yeah, magnitudes, because gold,
yeah.
so Bitcoin's move more. Yeah, so
So what do you want people to take away?
well, there's a very important thing here. So if you look at them correlated, and I'm kind of taking the more modern period. I mean, in the beginning, Bitcoin was just going nuts, and it's kind of unfair. It had an unfair advantage. So let's kind of take 2018 to present. Last 6-7 years. Bitcoin and gold have really traded in lockstep. I mean, they both represent protection from monetary debasement that can't be printed. Okay, that's first thing. Second thing is Bitcoin's performed more. It's gone up more than gold, and percentage wise. But it's also been much more volatile than gold. So on the upswings, it goes up faster, but on the downswings, it goes down faster too. Okay. And then the third point that I think is very important from the chart to take away is that gold is more widely distributed. Everybody owns it. The central banks are buying it. And I think it's going to be the first go-to solution for most people to protect themselves from monetary debasement, because Bitcoin's new and it's riskier and it's volatile. Not everyone believes in it. I understand that. I didn't believe in it in the beginning either. And so when monetary debasement starts to show up, gold tends to move first. It just does. And so the really best part of this chart, if you look at it, is you look at like 2019 and 2020, when the Powell pivot occurred because of the repo blowout. And then when we had COVID and we printed a ton of money, gold took off like a rocket ship. I mean, everyone's like, okay, I know what this money printing means. Buy gold. And they did. And it went up. Bitcoin was flatlined for quite some time. There was a real lag. And then one day Bitcoin woke up and said, oh, you know what? This is protection too. And they came into Bitcoin, and it went up even more percentage-wise than gold. But there was a lag between the two. And then, of course, when we started tightening in 2022, gold went flat to down. Bitcoin collapsed. Bitcoin went way down. And so, it went from 65 to 15. And so, this is a volatile form of sound money. But I think the thing people need to understand is that really, in my view, digital assets, digital secure assets that are immutable and have a limited supply, I think that, which is what Bitcoin is, I think that really is the future. And so the volatility is because we're in an adoption period. And it reminds me very much of what happened when Amazon got started. And if you go back and you look at a stock chart of Amazon, originally they're selling books. Now, of course, they sell everything, right? And so stock's up 212,000% since inception. And yet, they had a 90% drawdown, a 70% drawdown, a 50%. I mean, it regularly people were like, oh, this Amazon thing, they're not making any money, it's not working, and it would sell off. Similar to Bitcoin. And so, Bitcoin, while it's much more volatile, it is creating higher highs and higher lows. It's going up and to the right. So that's why I think, part of what I'm going to talk about in my speech here today at the show is that if you're a sound money advocate, as I am, and as all gold and silver people are, and I applaud them for that, for the choices, you should consider, if you want something that's potentially got more alpha, more upside, with attendant volatility, you should consider a small allocation to Bitcoin, because in my opinion, on a raw performance basis, it's going to outperform gold in terms of percentage up.
And you've been coming here for years at this point, talking about gold, silver, and Bitcoin. Are you finding that the attitudes are changing? Are people warming up?
It is. There's some people who are still pretty angry or, hate Bitcoin because they're gold, silver partisans, and they think it's God's money and no other money could ever exist. And I get that. Or they think that they've been, true sound money advocates and these Bitcoin guys are trying to steal their thunder, or they look at Bitcoin and they conflate it with all the other crypto, which is complete bullshit and fraudulent. I call everything that's not Bitcoin, it's a shitcoin. It's no good. I mean, I don't own Ethereum, all that other stuff. It's no good in my view. Bitcoin is actually reliable digital scarcity. Hard to get your head around that. How can we have something that's digital that's scarce? Never existed before. You have a computer file, you have a video, you have an audio, you have anything. You can make 1 million copies of it. It's digital. But they crafted a system that proves that has these 21 million coins with proof of work, so that there will never be any more than that. And that, because money really is a ledger, and that's the other thing, gold people, they tend to look at Bitcoin, they say, well, what is it? You can't feel it, you can't touch it. Well, guess what? You've got digits on your computer of your bank account balance. You can't feel or touch that either, but they're dollars, right? And we haven't been paying for things with gold coins for a long, long time. Now, so what you've got is gold is a ledger that is constrained by, God and geology, right? He only made so much of it. And Bitcoin's a ledger that's secured by computer code. There's a computer code that everyone can see, that everyone can verify, that's been running for 16 years. It's totally immutable. It can't be changed. That says if you own one Bitcoin, you own one Bitcoin. And therefore, what's happened is the marketplace has said, oh, I like that. I'll buy some of that. And as long as more and more people continue to buy it, it's going to go up. And my view is that adoption curve has been very, very solid. And that's why the reason why Bitcoin will outperform gold. They'll both go up with monetary debasement because the dollar is just getting worth less every time they print more of them. It's like, putting water in your beer. The beer gets less strong. But Bitcoin will go up faster because it's also got this adoption curve. And, and also to be fair, young people aren't buying gold. I mean, it's sad, but they're not, right? They should be, but they're not. And so, we live in a digital world. Things are becoming more digital. Bitcoin is easy to store, easy to move. Those advantages are causing it to continually grow. Adoption is growing. So.
Okay, always good to get your thoughts on
Yeah.
that. And I'll let us go over now to the gold and silver stocks. So again,
Oh, yeah.
looking back to last year, you gave us some good advice. You told us don't sell your gold and silver stocks now because you're about to get paid.
Yes.
And hopefully everybody listened to that. So I'm curious though, I've heard a lot of talk here about when gold and silver were really moving a couple of weeks ago up to those new highs. Some people did take profits. So what is your approach in this scenario? Did you do any of that, or you just want to
Depends, stock by stock, case by case. I mean, I think you look, so the general gold stock indices are up about 100% year to date. We're 10 months into the year and now 11 months, start of the 11th month. My fund was up 130% through September. So yeah, we had a lot of gains. But, and some stocks went too far too fast, and I started lightening up on those or selling some of those. But, these stocks were criminally undervalued last year. I mean, just criminally undervalued. And so they've now doubled. And my view is they're cheap. They're still not fully valued, but they're not as cheap as they were. Obviously, buying a year ago would have been better. But I look at the multiples of cash flow, I look at the potential for growth, et cetera, and I still feel pretty good about owning most of these stocks. I haven't sold a lot of them. I've only sold a few of them, and the others I've just kind of sold maybe a touch at the margin. So I'm very confident that we'll have another doubling in those stocks in the next kind of year or two, which by any measure, the S&P is up 18%. I mean, if, and maybe I'm wrong, maybe they only go up 50% from here, but that's still pretty good performance. And so, I feel like if you look at historical gold stock bull markets and how these things have traded, they tend to have a couple of good years in a row. And maybe then at some point they'll become overvalued. And maybe then at some point, governments will get more fiscally responsible. Maybe gold will check back, whatever. Those things do lie out there in the future somewhere. But I actually don't think they're out there in the next 12 months. I feel like we're right in the middle of it right now, and it's going to keep going. And it's sad because I think a lot of people have been saying to themselves, and they were saying this all this year, well, gosh, they're up a lot. Maybe I'll wait until they pull back. Well, they haven't pulled back. They haven't given you. And some people are probably looking at it today and going, oh, I don't know. It's gone up so much so fast. I can't really buy it. I'll wait for a pullback. And actually, you're having a little bit of a pullback right now. They're down kind of 10% off the highs or maybe 15%, some of them off the highs. But my view is that might be all you're going to get. Maybe they come to 20% off the highs. I don't think they get 30. If you do, great, and you can buy them there. But I think we're gonna, we will, as we move through the year, as the Federal Reserve transitions to QE and maybe yield curve control and money printing, the metals themselves will catch another leg up. Gold will go through 4,500 towards 5,000. Silver will go to 60 or 70. And these stocks will all go up another 30% pretty easily, and then maybe more, over the next 12 months. So.
Well, I think that's exactly what people are wondering, looking at this small pullback that we're having right now is should I buy now? Should I add more? And what's the best way to position? So anything else you'd share?
Well, I would say if you don't have any position in this stuff and you're looking to get some, I would buy some just right now. Just get in it, because this could be all we get for a pullback. But maybe if you're worried that they're going to go lower, maybe you buy half or a third or whatever, and you hold the rest, hoping that you get something lower. And if it turns out 2 months from now they really haven't gone lower, they've kind of gone sideways, you might just say, to heck with it. I'm gonna invest in the whole thing. I would say the best leading indicator, I think, for where they're going is the silver price. So silver is the most volatile. It's kind of the, it's just starting to take off. watch silver very carefully, in my view. Because silver will tell us how, quote unquote, on this thing is. And so we went through, I think we went to 53, maybe 54, we came back to 50, and then we were like 48 or 9 for a while. Maybe, I don't know where we are this morning, but we're somewhere around 50, plus or minus. We go through that 54, 55, 60, it's back into game on. We're going to go to 70, and then all the other stuff will move too. So I watch silver very much as a leading indicator.
Okay, yeah, that's a good one as well, because I think people are also wondering in this pullback, all right, when is that going to end? So if we keep an eye on silver, then we know.
Silver is a good clue. It leads what's going on. It's the leader right now. What's going on? It's gone up more than gold this year. Silver stocks have gone up more than gold this year. So to me, it's your best indicator.
Okay, and here, as we're getting toward the end, here's my fun question that I'm trying to ask everybody. What, if you look forward to 2026, what would your pick be for a top performing asset?
That's a tough call. They're really, it probably won't be gold, just because gold's so big. So here's what I would say. I sincerely believe that in 2026, Bitcoin could double and go to 200. Silver could almost double and go to 100 or 80 or 90, up from 50. And gold stocks could double from where they are. I mean, I still think we're on the cheaper side for the gold stocks. And by the way, we're really on the cheaper side. I mean, these gold stocks. So one of the things people don't understand is the operating leverage in gold. And these gold stocks were cheap when gold was 33,000, right? Well, you add another $1,000 to the price of gold, their profits go up a lot. And so even though the stock prices have moved, the profits have grown too. So, and that's, they trade a lot based on where people think gold's going to be in the future. If gold's going to 5,000 or 10,000, they're silly cheap today. I mean, now I don't know if it's going to 10. I'm pretty sure it's going to 5. And so, I think with a bull market, you get in, you be right, and you sit tight, and you ride it. Now, when do we get out of it? I mean, we get out of it when everybody and their brother is talking about it. I mean, this Morgan Stanley thing, that's the beginning of them talking about it, but it's still not widespread. My quarterly report is on my website, ema2.com. My last quarterly report, there's a great chart in there. It was a survey of investment managers in the United States. How much gold do you own? 0. 40% own 0. 0 to 2%. 20% own 0 to 2%. So 60% of investment managers own less than 2%. I mean, it's basically nothing, right? And then at the high end, it was like, how many of you own more than 7%? And it was like 5%. So, I mean, we're not, this is not an overcrowded trade. This is not showing signs of bubbliness or evidence of a top. I mean, this is kind of just everybody waking up to maybe you need gold. I mean, I know in my case, I have a lot of friends who are just traditional investors. They know I'm the gold guy. They're calling me up saying, they have no gold. They're calling me up. They're saying, yeah, maybe I should get some of this, huh? Right? And so that's not over. I mean, and what's going to happen to them is they're eventually going to say, well, yeah, I should get some of this. Or the other thing that happens is a lot of money is managed algorithmically. So there are people on Wall Street and other places, money managers who they literally look at all the results and they say, what's performing the best? And they're going to say, okay, well, the NASDAQ's up, 20%, and the S&P's up 14%, and gold's up 40%, gold stocks are up 100%. How come we don't have any of that? Right? I mean, they don't even know anything about it. They don't like it. Maybe they dislike it, but God damn it, they've got to own what's performing, or else they're going to underperform, right? So we still haven't seen all that, Charlotte. That's all still in front of us in the next year. I mean, trust me though, there will come a time when I'll get nervous, and there'll come a time when I won't want to be as long as stuff. But bull markets try and throw off all the riders. I think the hardest thing to do, and I know this because I know it with my partner, I know with a lot of people have looked at this and said, God damn, it's so hard to buy something that's up so much. And I'm like, no, yeah, that's right. And that's why it's hard to do it, but that's why you're going to get paid if you do it. Right? I mean, and when it feels easy, like, oh, this is a no-brainer, I got to buy more gold after, it continues to go up because we all know it's going up forever. Whoa, yeah, let's start, hang on a second. Maybe it's not. Let's slow down, right? There's still, they say, the saying, the old Wall Street saying is bull markets climb a wall of worry, right? And when I talk to gold people, we've been so beat up for so many years. We've had so many tough tough years, tough quarters, tough. It's been a hard area to be in, and they kind of like to see a little bit of daylight. Oh, thank God, I'm going to sell. And I'm like, well, I'm not sure that's really the right thing to do. I think we might actually be right about this debasement, and if it's a trend, a meaningful trend, I think it is. It doesn't end in 6 months or a year. It will run for several years at least. So that's how I see it.
Yeah, yeah. And I think you hit on something that has been coming up at this conference. Everybody who is in gold wants to be a contrarian. So maybe when they see it going and other people like the Morgan Stanleys coming in, they get nervous. Like, oh, am I mainstream now? Like,
yeah.
Yeah.
Well, but that's investing, right? I mean, what happens is, you want to do what's right before everyone figures out what's right. And a couple of years ago, we all figured out that this was right because they were going to print money. We got to get comfortable that other people are going to come figure it out too, because frankly, they're the ones who are paying to drive up the prices. Now, what we have to watch for is, does everybody think it's right and it's a total no-brainer, and dumb money is coming into it and blah blah blah. I mean, that lies ahead. I mean, there will be a time maybe to transition out, but like I say, I think that time is not this year. It's not now, and it's probably not a year from now. It might be a couple of years from now. That's my guess.
Okay, well, I will release you back out on to this show floor. This was great. Unless you had any final thoughts, maybe we talk about where to find the book.
No final thoughts. Yeah, I'll mention the book. So I haven't been able to get a mainstream publisher. The book, I don't know if you've read it. I'm giving you a copy of it. The book is kind of edgy, and it attacks the Federal Reserve. It attacks the monetary system. Let me tell you why I wrote it. This is important. I wrote it because I think a lot of people in the world are hurting and are feeling like they're getting screwed economically, and they don't understand inflation. And I wrote it in a way and with a tone where I wanted people to understand what's going on and why it's not them not working hard enough. It's a system that's designed to hurt them. And then I wanted them to understand that given that, there's actually a way that they can fight back. And that is to buy these sound monies and to advocate for sound money, because what will, in my opinion, fix a lot of the ills in our society is when we return to sound money. So that's why I wrote the book. The book can be found on Amazon. It's hardcover, paperback, ebook, a Kindle, and then also audio. I had a great guy read it. It's about 13 hours long. So, but as I say, no publishers picked it up. They all looked at it. Some were pretty interested. And I've sold 45,000 copies. So it's, which I hear is not bad for a self-published book, right? And yet, I'm pretty sure it's too edgy for the average publisher to publish it. So you'll see. I don't pull my punches. I call it the way I see it in the book. So, and some people like it and say it's a fun read. It's got a 4.8 rating on Amazon, 4.8 out of 5. So it's doing okay.
Very nice, very nice. Well, we'll have the link in the video description so people
I appreciate
can
that.
have
Thank
it.
you. Yeah.
Well, amazing. Thank you so much for coming on.
Thank you, Charlotte. Really nice to see you again.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Larry Lepard.